Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hanks. But let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, the co-founder of LikeFolio.com. Thanks for joining us, Andy.
Hey, happy Monday.
All right. So we're talking delivery, and I'm guessing, these companies had great holiday shopping seasons, even if there were not a lot of products on the shelves, but people were still getting deliveries. It's dropped off quite a bit as inflationary pressures have picked up. But as far as UPS and this delivery space, what kind of data are you guys seeing at LikeFolio?
Yeah, LikeFolio is really focused on understanding consumer behavior and consumer insights and really how the consumer is reacting to these companies and to different macro trends. And one of the big, kind of dichotomies that we've seen over the last 90 days has been the increase in the amount of delivery delays. So people talking about their package being delayed, the delivery that they thought they were going to get on Monday now won't be here till Friday. Pretty common theme starting to pop up, 11% more than it was a year ago, and really kind of accelerating. And along with that, a trend showing people talking about shopping online has dropped off 22%. I think the two are very much related. We've seen a competent competition emerge in curbside pickup and really local delivery. So I think consumers are becoming less and less reliant on traditional e-commerce, fast delivery type of methods, and going more and more to the local retailer where they know that they can pull up curbside and get the item that they want, or go into the store really quickly and pick up what they bought online. And so that dichotomy, I think is really very interesting here. And there's pin action all around the economy when you think about that starting to happen, and sort of that shopping online becoming just as much a local phenomenon as it was kind of this nebulous thing that was out there. You bought from Amazon, you don't know where it came from, but it showed up at your door. Well, you start figuring that out a little bit when things start getting late, and I think that's what's going on with the consumer. Now, when we dug down into UPS versus FedEx, big rivalry, obviously, both competing a lot of times for the same business, we really see a huge divergence in consumer happiness over the last 90 days. And so this tells me, you got FedEx at 39% happiness level, which is extraordinarily low, and UPS at 59%, which is actually not great itself. A lot of that's those delays, but it looks like UPS definitely did a better job through the holiday season of servicing customers, at least the best they could with the supply chain stuff going on. So, we see an e-commerce pie shrinking a little bit, and UPS making customers happier than FedEx at least. That's at least a signal to us that UPS could be looking forward to some market share gains over the next year.
Andy, your comments and your data are consistent with the CEO of UPS's comments saying, their theme lately has been better, not bigger. And what they've done, they've gone back to their company and work on things like margins and all the things that make their company within, as it is right now, better without growing. And they're focusing on smaller and medium-sized businesses and healthcare and things like that, and different ways that they can get there. But what's the fundamental thing, in your opinion, or your data, whatever you see? Why is UPS, in your metrics, doing better than FedEx? Is there any reason that sticks out at you other than, hey, their FedEx is kind of poor in happiness, UPS is a little better? Is there anything that's sticking out to LikeFolio on this?
Yeah, I really think that it's this delayed shipping. People have gotten really used to getting things exactly when they were told they were going to get them. It was actually a pretty phenomenal revolution that took place over the last decade, and now you're starting to see for the first time this kind of step backwards. UPS saw on-time shipments at 97% over the Christmas holiday season, which was up from 2020, while FedEx actually fell from 95% in 2020 down to 91% in 2021. So almost 1 in 10 packages sent through FedEx was actually delayed. And so it doesn't take very many of those for the consumer to shift their preference really quickly. Could have been FedEx, UPS, I don't really care. But then eventually, when one out of 10 packages shows up late, you've suddenly got an opinion and a preference between competitors that wasn't there before. We think that's meaningful going forward for both of these companies.
Yeah, and Andy, I know we always think of the delivery space as that duopoly, right, between FedEx and UPS. You had a little bit of DHL in there. They're basically out of the U.S. now. But at the same time, do you see anything in your data that is reflective of Amazon logistically taking more market share and where it's going to be a tripod here soon? Because I know Amazon is investing a lot of money. Do you see any data that's reflective that, hey, maybe Amazon's taking more of FedEx's business, or maybe UPS is fighting off, Amazon? Because I know they both have a lot of business through Amazon.
Yeah, and let's not forget the U.S. Postal Service is also a big player in this. And so, I do think that I actually look at it the other way. I think Amazon sees the threat to their business and to their ability to make customers happy when they rely on these third-party shippers. So the more that they can vertically integrate that, the more that they can control that last mile, probably the better for them. I think that's more of an indictment of FedEx and potentially UPS than it is really, how much Amazon wants to do that. And so for me, the way I think about it is you've kind of got Amazon, as the elephant in the room, and it's verticalizing its delivery mechanisms internally, and then everything else. The Shopify enabled culture, that whole e-commerce section, which is growing very rapidly, small businesses, medium businesses, Etsy, all these relying on these third-party shippers to get things where they want to go. So Amazon can actually create a competitive advantage in the delivery space by taking control of that, whereas those smaller, medium-sized companies don't have any chance of doing that. They have to rely on UPS, FedEx, or the Postal Service. And if FedEx keeps disappointing consumers, it's going to be on those businesses to say, well, we ship via UPS because that's what our customers like. And that's what we think could be the big competitive shift that occurs in 2022 if these stats hold true for the next 90, 180 days.
All right, Andy, before we let you go, I want to dig into that LikeFolio sized brain and figure out this about these two companies. The operative word that everyone's beating us over the head with during this earnings season is supply chain problems, right? Yep. Are either of these companies having those, or the more interesting question is, could they be part of the solution going forward to supply chain problems and getting packages from off boats and away from ports and things like that and into airports? What are your views on something like that?
Yeah, I think that absolutely they could be part of the solution. They are logistics experts. They're also part of the problem. I mean, when you see 1 out of 10 FedEx shipments delayed, it doesn't give you great confidence that they're going to solve the world's supply chain problems. But I do think that they are logistics experts through and through. They've executed for decades on that promise and done very well. So this might be a blip in the radar. But I'll tell you the other thing that we're also seeing is that these companies, because there's so few of them, there's FedEx, there's UPS, and there's kind of the post office, they really do have some significant pricing power. And so in an inflationary environment, we tend to like companies that have that type of pricing power. And I will say, from what we've seen so far, consumers are willing to accept, and businesses, higher delivery costs if it's on time and if it solves that kind of supply chain problem for them. And so from a margin perspective, I don't think either one of these companies is going to be beat up too badly. Yeah,
they raised, in 2021, they raised prices on average nearly 6% to offset some of those rising costs. But Andy, real quick, while we have you, going into this earnings event, it seems like, consumer sentiment's happier for UPS. they're doing better maybe from that side of it. What kind of score as far as earnings go do you have on this company?
Yeah, UPS, I'd say just as slightly bullish as you can get. FedEx, pretty neutral. There may be an opportunity for a longer-term pair trade there. I think I'm more interested in listening to the earnings call and trying to understand and thinking about the pin action that may come off of this in e-commerce and other places than I am really getting excited about betting on either one of these companies for a pure earnings trade.
Yeah, this might be wait for that conference call, because I'm sure there'll be a lot of clarity on the issues that they have. All right, great stuff. As always, Andy, have a great day.
Thanks, you too.
All right, that's Andy Swan, the co-founder of LikeFolio.com, joining us, giving us the data on UPS.